Hey investors, March has been somewhat of a roller coaster ride. At the peak of February, we were up about 10%, but now we're roughly flat for the year. The markets in general have fallen because of the fear of rising bond yields. Generally, I think this is a misplaced fear. The 10-year yields are still quite low at 1.6%. It doesn't make sense to switch into bonds at this point. Also, I've always been careful about buying stocks or even great businesses at the right price. I make it clear in my bio, for example, that while I want to buy very high quality companies, I also want to make sure they are at reasonable prices. So generally, I'm not scared of any of my stocks being overvalued and thus scratching. Some of them may be a little expensive, but perhaps you can justify that with them being of such high quality. In any case, let's take a look at the portfolio and the stats in detail. So, we're basically flat for the year so far. But given that we were up at least 10% through the middle of Feb, I think we can definitely reach all-time highs again. Now let's take a look at the stocks we own. You can see many of the stocks are significantly off their all-time highs. You can see Amazon is down, Intuitive Surgical is down, even Alibaba, which fell a lot already, fell during the latest market downturn. But I think a lot of these stocks have good potential and they're not that expensive, especially stocks like Amazon, Alibaba. I think they are not really expensive, especially Alibaba. I think Alibaba is quite cheap. I already hold a significant amount of Alibaba in the portfolio, but if I didn't, I will probably add to it. And if it falls further, I may even add to it. Stocks like Intuitive Surgical have always been on the expensive side, but I have no doubt in my mind that Intuitive will reach its all-time highs again and surpass that considerably. It is such a high-quality business. It suffered a little last year because of hospitals being overburdened with Rona cases, but I expect it to come back roaring this year. Other stocks like Facebook also seem very cheap, so I don't expect them to fall much. Google has done very well this year so far. It's probably because it was already cheap last year. MasterCard is doing well, it's coming back strongly. A stock like Adobe, I have the same feelings as I shared earlier with Intuitive. It is a high quality business and I expect it to reach all-time highs again. Other stocks that have done well are PayPal and Baozun so far this year. Teladoc had a big fall during this last market crash, but I still think that Teladoc has a very bright future. So I think that it will come back strongly. It is also one of the more cheaply valued stay-at-home stocks. Compared to a Shopify or CrowdStrike or Fiverr, I think Teladoc is more cheaply valued. So this was one reason why I added it to the portfolio. Autodesk was a bit expensive coming into this year, and that's probably why it has fallen about 10%. But it is another very high quality business, and I'm sure it will reach all-time highs again. During this last market correction, I sold a little of Intel, which has done quite well so far this year, and I bought into the triple Q ETF. In my bio, I've stated that I will also invest in very high quality ETFs, and I think the triple Q ETF is definitely one high quality ETF. This gives me a chance to buy into tiny percentages of a lot of other companies that are also doing quite well, including Tesla. These are the other stocks we have in the portfolio. Illumina has done very well so far this year as well. DocuSign has fallen hard. I knew that DocuSign was a little overvalued coming into the year, so that's why I only bought a small percentage of DocuSign. But if it keeps falling, I think it is worth buying more. It is another type of business that has a strong moat because once you sign up for it and learn how to use the software, there is a high switching cost to switch to a competitor. A high percentage of its business is also recurring. Another high quality ETF we own in this portfolio is the cybersecurity ETF CIBR. I did not want to buy into CrowdStrike or Palo Alto because I was not very confident about the valuation of CrowdStrike, and I'm not so confident or knowledgeable about cybersecurity in general. So I decided to buy into an ETF because I think it's definitely a mega trend we want to take advantage of for the portfolio. And another ETF that's in the portfolio is the ARC Genomics Revolution ETF. Again, this is something beyond my circle of competence, so I'm betting on Cathy Wood and her team to make very shrewd picks for this ETF. But in general, I believe that genomics is a game-changing field to be in, and it will definitely have a good upwards trend. Finally, the small piece of Ethereum that I bought has paid off. It's up almost 100%. I still don't know enough about Ethereum to be able to value it, but I think owning a small piece of this cryptocurrency is a good bet, and I intend to let it run as high as it can go, or even if it falls. And if it falls a lot, perhaps around the original price that I paid, I might buy some more Ethereum. Generally, I'm not very keen on Bitcoin, but I think Ethereum is probably the better cryptocurrency because it's more useful. So we have very little cash left, but if there's another market fall, I will shift again among some of the positions into those positions or those stocks that have fallen more. So for example, I might trim my S&P Global or Visa holding and buy into some other very promising stocks if they fall a lot during another market correction. That's it for this update. Thanks and have a great day. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the eToro platform, and you like the ability to copy good investors, I suggest you join the eToro platform. You can use my link in the description tab, and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video.